This, of course, coming at a time when we've already seen a rally in value. This GTV chart on the Bloomberg perhaps showing that those moves are now cooling. Global growth stocks back in the lead over value, especially with the higher earnings that we're seeing recently. So is it worth continuing to push into value, especially when perhaps valuations could be already looking a little bit stretched?
I think that we haven't seen the rotation really yet from growth and tech stocks to value in the U.S. as growth stocks continue to propel forward. But we have seen the rotation in places like China, where the technology industry continues to be under a microscope, under regulators. So I think that it kind of depends geographically where this rotation will continue. But I still think overall, this rotation trade still has many legs to it.
So geographically, then, you're favoring China, especially in the tech sector, given the pressure that we've seen recently with the regulation news?
I think that Chinese stocks are very interesting to me right now, especially Chinese technology stocks. They've really come off their high, and we've seen the rotation from tech stocks to value. I think that trade very much makes sense given some of the regulatory changes. But I think that Chinese tech stocks are still very attractive because both their fundamentals are very strong. COVID has very much propelled the digital economy forward, and technology stocks are really the ones that benefit from that.
David, you hinted at some of the regulatory changes, and of course we know more changes are to come when it comes to the regulatory clampdown. Does it worry you from a growth outlook point of view that this is not going to be the same as the years of unfettered growth that the big tech giants have had in China?
I think it makes sense that regulators tend to let new novel industries develop first, and once they started growing, that regulators then take a microscope and examine ways that they can better regulate the specific industry. And so we saw that in the video game industry in China, and also now with the e-commerce platforms of financial technology companies as well. So it makes sense that these kind of regulations are coming down the pipe. I don't think that this is a sign that there are going to be systemic risks due to further regulation, but this is just a catalyst that the industry has to get over, and the removal of the overhang is coming.
When you take a look at the, I guess, bifurcated or certainly uneven pace of both the recovery from COVID, but also the vaccine rollout, where do you see opportunities in those gaps?
Well, last year was all about COVID containment, and Chinese stocks very much benefited from that, especially, and also North Asian stocks. But this year, it's all about the vaccine rollouts, and I think that American stocks have really benefited from that trend. And we've seen a expedited vaccine rollout in China, and they have plans to vaccinate around 40% of the population by the summertime. So I think suddenly the Chinese play will start to gain a little more traction as investors start to refocus their attention back to the Chinese market.